that is getting a bit better, but now is a buyer's market, as we can see. Great time to buy because you have less competition and obviously more inventory than we have since 2018. But now I'm starting to see the price range come down to a point where, for some investors, it might make sense to even buy single family homes if the rent and the interest rates all coincide up together. Because there have been like nice homes, like well under 300,000 that have been listed, right? So we haven't seen that in a long time. So it is a good time to kind of look at your strategy as well and see what you're looking to buy and fit into your portfolio.
All right, everybody, welcome back to the Canadian Real Estate Channel. I'm Adam JD Martin, and today we've got Sarah here to give us the Sarnia market update. So Sarah, what's going on in Sarnia?
Well, nice to be on again. The market here is moving along. I mean, just this week, I feel, as always, fall seems to be our spring market, or in my eyes, it does. Everyone wants to move before fall or before winter, I guess I should say. So it is picking up, but we are looking at August stats. So you've been talking to everyone, things are slowing down as interest rates keep going up, right? So it'll be interesting to see where this goes by Christmas, but for now, it's still looking in an investor's eyes like a good time to buy as the market is fearful.
Awesome. Yeah, I suspect we're going to continue on the rising rates. Actually, just today, as we're recording this, the American Federal Bank has raised their interest rate 75 basis points this morning. So we'll likely follow suit.
Yeah, I'm sure they will. It seems to be a tit for tat going along the lines like it always really has. And I mean, it is a good time to buy for investors as long as the numbers make sense, right? So generally, I feel in my investors, in our experiences, we are definitely getting better deals. There's less competition. People are fearful. They want to sell. And they just have to come to terms that if the deals are not working on paper, it's none of this, cap rates of 3% and hoping that you can burr it or, whatever you're looking to do with it. Everyone just has to be a lot more conservative. So deals are out there as long as sellers are willing to sell.
Awesome. Yeah, I couldn't agree more. I think it's returning to the fundamentals, not that we ever should have left those behind, and focusing on what actually works with the BRRRR strategy with positive cash flow and things like that.
Yeah. So I think the numbers are interesting this month, and we'll look at those. And that's really all. Just a quick update this month, and it'll be interesting to see what the following months come up with.
Awesome. Yeah, let's dive in.
Okay, so looking at the stats here, just some tidbits here. So national home sales in general edged down 1% on a month-over-month basis. So as we said, still coming down. But they were still about 24% below, came in 24% higher or below, 2021. So sales are obviously down. Newly listed properties around 5% less. So we are seeing this slowdown of people trying to catch the wave before interest rates go up. So things are leveling out, but we're still up about 7% over last year. So looking at Sarnia specific numbers, if we're looking at new listings, we really have more inventory than we have in a very long time. Basically, there was about 260, I believe, new listings in August alone this year. Now, we talked about this last month as well, but how many of those were relistings versus brand new listings? I do think the market is catching up in Sarnia where there are less relistings just because people have realized you either price your home right or it's going to be relisted and not sell. So that is getting a bit better, but now is a buyer's market, as we can see. Great time to buy because you have less competition and obviously more inventory than we have since 2018. Now, sales activity, as obviously we've seen elsewhere as well, sales activity has been down. So 2020 kind of started the second year of the pandemic, right? The sales were really high. We were really low on inventory, but as the pandemic has winded down, that has also came down with interest rates too. So it is less activity than 2018. I know in 2018, that was when the bidding wars kind of started in Sarnia. I mean, slowly. It wasn't till true pandemic when they really were on every home, but it is definitely the time where you can get in without other offers. I mean, there's still the odd one that does happen in these rare occasions, but it's one where you do have a few days to get to a listing, and a lot of the listings are priced lower than they have been in a long time.
Yeah, interesting. They're like, dip below 2018 figures.
Yeah, and I mean, 2018, we started to see, people from cities coming in. Like it did start even prior to COVID, where they're like, "Hey, I can afford to buy here." But yeah, it is pretty wild how low they have come down because 2018 was definitely a very different market. 2018 was also kind of a bad year for, stocks, money, like recession, lingering type times. So we're actually below that time. And yet we aren't technically in a recession yet. So it is very interesting statistics that way too.
Yeah.
Now, looking at months of inventory, this is where obviously it's changed as well. So again, as we expected, we have more months of inventory than even 2018, and way more than 2020 and 2021. People are still looking. Definitely, as I said, I have a few new listings coming up myself. People have just been adjusting to kind of the pricing, and there's a lot of fear in the sellers still to see where they should be pricing their homes and if they're going to sell, if it's going to be enough. There's just a lot more moving pieces, and that's where, you can't just put a sign up anymore, right?
Yeah. Yeah, it's a
And
lot of big
I'm
difference.
sure you're seeing this. Yeah, I'm sure you're seeing this all over the place too.
Yeah, absolutely across the board. That has been the market update, all down the 401, as far as you can see. That has been essentially the story, right? Sales volume is down, months of inventory is up, and generally speaking, days on market as well.
Yeah, and I have seen, I mean, I even going back to 2020, 2019, there wasn't really many single family homes where it made sense to, as an investor, even to buy for rentals, right? But now I'm starting to see the price range come down to a point where, for some investors, it might make sense to even buy single family homes if the rent and the interest rates all coincide up together. Because there have been like nice homes, like well under 300,000 that have been listed, right? So we haven't seen that in a long time. So it is a good time to kind of look at your strategy as well and see what you're looking to buy and fit into your portfolio.
Yeah, it seems like there's a common trend or theme here of really just, again, that return to the fundamentals and purchasing based on what the strategy actually supports, not what the emotion of the moment is in the market or what the sentiment in the market is. It's like, hey, let's actually look at real market rents compared to our cost basis, and then make a great financial decision based on objectivity, which is you would think what we should have been doing all along.
Yeah, and I guess and I've worked with obviously investors throughout this as well. And I feel like I have always been that conservative one, being like, hey, how does this make sense? And then, you have some investors that do listen, and then others that are like, oh no, I'll just buy private, a sweet deal. And then I'm like, that's not a deal though. Like, where are these numbers coming from? Like, it's the emotion of, well, I need 5 houses, I need 10 houses, the market's hot, it's climbing, I'm behind. And people really, and investors need to remember, and I think this is a slap in the face to some of them, of where those fundamentals really do matter, and the market doesn't always rise, right? We need to know our numbers and always plan that kind of cushioning if things don't go well too.
Yeah, absolutely. It's the old adage of slow is smooth and smooth is fast.
Yeah, I mean, yes, your money, with inflation and stuff goes down, but there is something to be said. Sometimes save your cash for a rainy day, and when no one else can buy, you will be the one that can buy. Depending on your scenario too. So there's both ways, right? I think what I found most interesting is this next slide here. Now, I like to view this. This is usually the biggest one, anyways, but looking at like the medians in the market. Now, some obviously, there's always outliers because in Sarnia, there's not a huge amount of listings to look over, right? And it's only a month's time. But what we have been seeing so far over the last 6 months, besides the last few outlier months, it's just been kept going up, right? Year over year of increase. So if we're looking we'll start with the north end because that's not, I mean, it hasn't been an area where people are buying in terms of investments per se because of rent prices and things like that. But we've seen only a really modest increase over the last year of 11%. So I think that really shows the market's still going. There's still a high demand because if it was all the same, I mean, with interest rates, it should really go down a lot more, right? So the demand is still there, but an 11% increase has been one of the slowest we've seen in a long time. We actually see like Sherwood Village, so that's a great area for students. Down at the bottom right, great area. It's hasn't changed since last year for August. So August is always a weird month I find in Sarnia. People are vacationing, people are out, people are away. It's slower, but this is the first month I've seen in a long time where they were the exact same amount. So there has been no change in the last year in this area. Um, it could be a slowing of homes. It could be an anomaly. We'll have to see. Give it a few more months and see how that one works. South End, this is where a lot of investors, even that are watching this, have probably been buying recently or in the last year. The lower end of town that has really came a long way as people are revitalizing it. This even the years before was a lot higher. I'm thinking there was very few sales this month just because 220 there was definitely some lower sales as it's showing obviously it's decreased 22%, which isn't true. The prices have come down and I feel like there's a lot of for sales in that end of town where they're still trying to pull the big money that they were getting 6 months prior where a bungalow might have sold for 400,000 there, which was like obscene for the area. So I would still put this higher. We'll see what happens next month. That's something I really am watching, especially in terms of investments. But they have come way down in that area compared to people were buying in that area because they couldn't afford anywhere else, right? So they were willing to pay more to get a house. Now that's changing as the other areas are changing in value.
Yeah, and I would have thought that maybe perhaps some of the people that had owned these buildings in the South before as investments, perhaps some of them have cashed out during the previous year or two and have actually moved into arguably better assets in the North or even in Sherwood and
Yeah.
so there's still probably some opportunity here. I know I've just offered as well on a single family in the South End there for my offer was 200,000.
Yeah.
And perhaps that's a bit under the fair market value, but it comes with its own set of challenges there in the South, like maybe not the best tenant quality, and the building itself too, reflects who was living there in the past and foundation issues, etc. So
Yeah, and I mean, even if it's under like we said, if the market is depressed, it's going to be, in some way, it's one of the first hit, right? Like for people not buying there. So you still have to play within reason, right? And
yep.
I feel that's another thing. People are like, well, the houses are so cheap right now, like they're going down in price. It's like, but yeah, like you said, you have to think about how much is it going to cost me to fix the foundation? All these things. Now I'm up to, 280 and or 300, and you have to make sure you're okay with being there because maybe if the interest rates keep rising, it's not even worth that at that time, right? So fair market value or not, I think it really depends how much work a home also needs that
Yeah.
sellers kind of have to realize needs to be put into that. But yeah, that's still an area that I would definitely say I'm driving investors towards, in terms of this is where you'll find better deals, especially as interest rates rise and maybe your pockets shrink a bit. That is an area with opportunity. The Central, I've been seeing a lot of opportunity as well. Central has some of those areas that are like the South End. You know, you've got the odd street or the odd block, but there have been more and more for sale, even duplexes, triplexes, older homes that definitely could use some love. Closer to the downtown area, kind of right dab in the middle. That there are quite a few for sale, and if the right deals can be made and tenants be moved out in, you know, a safe and fair way, this would definitely be an area that I would be watching, just because too it is very close to malls, it's close to parking, you know, everything is in that area that you can go to. So it saw the biggest increase this month anyways, with a 17% increase. It does have many different neighborhoods, and I've talked about this before. So some areas, obviously, there's newer homes, but what I would focus on as investors is anywhere from where the T is, right in the middle there. That's like kind of your Indian Road, I believe. Don't have my glasses on. But from there up towards where it says Sarnia, that's kind of the area that an investor is going to look at in terms of these homes. So yes, there are some issues with the areas, just like the South End, just like anywhere, right? But these would be the areas where you can find those cool, bigger homes, especially if you're looking to like add an additional unit and it might be zoned for it, where you just need to pull a building permit to get the city to check that, you know, the heights are correct and things like that. But I would be looking, if it was me, for single family homes in that area that might have that R2 or R3 zoning. So one, we're getting them at a lower price right now because of interest rates, and two, you can, you know, turn them into 2 or 3 units in a non-conforming way to make it make sense for your own pocketbook as well.
Yeah, I think that's a great strategy too, and again, potentially attracting you know, a really high quality tenant to these areas. And I think there's something to be said about that when we head into these you know, uncertain macroeconomic times.
Yeah, and I do think, like, compared to the South End, it's just a different style of home too. So they're homes that have like maybe stained glass, you know, like the bigger, grander homes. So there's a lot more uniqueness you can put into the units as well, compared to the South End, which, you know, even back then was a lower end. So they just weren't built as fancy or as large. So the central area definitely has that cool cultural element too, that as the neighborhoods, you know, sell off and get better, you can create some really cool units. And I mean, that is a drag too, right? Like, because if there ever was a time where there's lots of choice in rentals, you want the one that looks the best, right, for your tenants.
Yeah, of course. I mean, just bringing better inventory to the market again comes with all the pros of having you
Yeah,
know, better
yeah,
inventory.
yeah. You want the yard, you want the front porch, like, and that's all things that that central area could provide you with, if you're willing to, you know, put a little elbow grease. And from what I'm seeing, also correct past landlords' mistakes, where they, you know, try and do it cheaply and shove a unit in that maybe it shouldn't, but that all can be fixed if you're willing to put in the work. Besides that, though, that's really all I got this time. Just a quick market update. I the numbers, just, you know, there wasn't much activity. I really am excited to see next month, to see if it keeps declining, and like we talked about the banks, if the bank does raise it another, you know, half or even 7.5 basis points. I do think it's probably going to hit the market pretty huge, because, and then I guess we'll see if it goes into recession territory, what it does with the fixed rates, right? We might see them kind of cross.
Yeah, I'm definitely interested to see the real September, October numbers. And I fully agree with you that I believe the latest probabilities were actually skewed quite heavily in favor of a bigger raise rather than a smaller. So I think, like, you know, 25 basis points is not even a consideration at this point. 50 is likely the minimum raise, and then as much as 75. So if that does happen, of course, you know, buying season will be on. But at the same time, September, October, you know, we're into the fall market. Supply should be coming to the market. People typically do like to transact during these months. So, Yeah, I mean, just going to be fascinated to see what happens. I wonder how many people will sit on the sidelines or how many people will actually go out there and hunt down those deals. But that being said, there are deals out there, right? There's deals in
There
every
are.
market.
Mhm.
So I don't think any of these things should be an excuse not to take advantage of a great deal if you have the right power team and you have the right, support in order to execute on it and exit strategies, et cetera. So Sarah, thanks again for this market update. I know it's definitely insightful for the people watching at home to just kind of hear these stats, particularly with Sarnia, because it's a closed board and it's just difficult for us to research it. So definitely good to hear you're kind of seeing the same as the rest of us. And it sounds like there could be buying opportunities coming up.
For sure. Yeah, looking forward to next month and meeting with investors before then.
Awesome. Thanks, Sarah. Guys, if you're not already subscribed to the channel, please get down there, hit the subscription button, hit the notifications, because we're back here every month with these market updates. And this is how you guys stay connected. This is how you get plugged in and meet the right power team members. If you're in Sarnia or you're looking to invest in Sarnia, reach out to Sarah. And we'll see you guys back here next month. Cheers.